Quite a few times.
50 times?
More.
100 times?
More.
200 times?
More.
500 times?
Probably. Quite a few.
XRP is at a critical level. Will it fall back to 30 cents or start flying high to new multi-year highs? Should you still hold your XRP through that 37.5% dump? Should you even hold your crypto tokens that aren't XRP? And most importantly, when will XRP in the entire crypto market break back out to new all-time highs? Over the last 2 years, it feels like XRP has been stuck in a deadlock. Prices haven't moved too much, and it can feel boring if you've been invested like the guy at the start of this video, which is why in this video, we're going to be covering the price action of Ripple, some major points of interest, and how XRP will need to avoid this uh-oh zone at all costs. We'll also be covering some new developments that could wreak havoc on the crypto markets, like Germany selling off its crypto, and how new information came out from a BlackRock executive surrounding the ETF adoption. And finally, we'll be digging into this one future telling indicator that could be a solution to trading XRP. We're going to be digging through some key data and looking for clues on what to do with the crypto markets next. So by the end of this video, you're going to have the right information to make informed decisions with your crypto portfolio and feel confident in your choices. And as always, if you stick around to the end of this video, I'll be sharing one mystery crypto that's been performing well as of recently and some potential plays if you decide to trade it. Hello and welcome to the Bull Runners YouTube channel. My name is Paul Light, and before we get into anything in this video, I just want to be clear that none of this is intended to be financial advice. If you're seeking that, go to a registered or a licensed financial advisor. Everything in this video is for informational or educational purposes only, and arguably these are our opinions, but we do a lot of homework to bring you guys real value. So first and foremost, let's just get into it. So we're going to head on over to bitcointreasuries.com. Okay, and in particular, I'm going to go ahead and over to countries. And we're going to go and find Germany. Now, Germany holds about $3.242 billion of Bitcoin for a total supply of about 0.25%, and that would be about 50,000 Bitcoin. Now, we're going to head on over to the news. Now, if you look, some countries own a lot of Bitcoin. You've got private companies that own Bitcoin. You've got ETFs that own the largest portion of Bitcoin, so on and so forth. But we're going to focus on Germany in particular. And as you can see here, Germany begins selling its Bitcoin billions, triggering volatility fears. I'm going to scroll down here. The German government is starting to sell its sizable stash of Bitcoin that was seized from operators of a movie piracy website. Now, it's important to note that this was in 2013 when it really wasn't worth nearly as much. So they've been sitting on this for quite a while. And if you know anything about Germans and their culture, they're a very astute group of people. They're typically very hard workers. A lot of great projects in engineering come out of there. In terms of Europe, they're a global powerhouse from the financial sector and system. So they have a lot of really intelligent financial advisors and arguably people that manage the money over there. Okay. And so if they're selling right now, that could potentially be an indicator that we are near a market top. Okay. Considering they've been holding on to it for so long, saw price decline a little bit, and they said, we probably need to start getting rid of this stuff. Now, that is just an opinion. I'm not too sure if it's going to affect the markets long term, but maybe they're just starting to sell into a bit of upward price, action. Who knows? The point I'm making is that it is not a great time to see a bunch of added sell pressure, especially when we're talking the amount of Bitcoin that they have. Now, we're going to continue. The government has apparently sold over $195 million in Bitcoin within the past 24 hours. German authorities still hold a substantial $3.05 billion worth of Bitcoin. So obviously, Bitcoin Treasuries hasn't updated their data, but I'm assuming every 24 to 48 hours they'll do that. That being said, they're still selling their Bitcoin. Having seen a slippage in the price of Bitcoin, the German government is releasing a significant amount of tranches of Bitcoin and has taken the view that the price of Bitcoin is to soften for a while to come. Okay, so that being said, obviously they're going to update this and show you the amount of Bitcoin that they have left over. But if they continue to sell, it's really going to hurt the price of Bitcoin. And when we look at what's happened on the 20th in particular, you can see that we actually had a decline from the 17th on down to about 64,000. And I would argue that this is where they started doing their selling. So if I go to that 30-minute time frame, when the price started climbing back up to $66,000, it's highly likely that they're the ones that have created this added sell pressure. And just looking at that price of Bitcoin and arguably how it's going to affect crypto, your XRP bags, virtually any altcoin bag that you hold, we're looking at a breakdown below the prior low right here at 64,000, and I'll even increase the size of that, $64,600. And it's probably going to continue in that direction if the German government continues to sell. Now, eventually, right, when you have so many people that are long Bitcoin, and then, Bitcoin continues to dump, it's going to hit a price arguably below this low right here, where people become a little bit skittish, sell their long positions, and arguably some people will get liquidated, which will cause cascading liquidations. Now, I'm not saying that's going to happen, but if you start to break down below this prior low, I can virtually guarantee that there are boatloads of stop losses right around here. And if not stop losses, right, liquidation levels. So you have a lot of things that are going on dynamically in the market that it's very hard to paint a very clear picture of what's happening. But typically, if you see something, so does everyone else. So if people started going long here because let's say we broke above this high right here, okay, let's say right here or here. So either or, you could argue this would be the high. And so if we broke right here and then started to pump right into this range here, people probably started taking on a bunch of longs here, right? Going long, adding some leverage into the play. And then what happened was they said, well, this was the prior low of the range here at 64,000. So if the price hits here, right, I'm going to take on enough leverage that I would be liquidated below the prior low. So chances are, with a bit of added sell pressure from an actual governmental entity with boatloads of Bitcoin, we could hit that level. And then you also have the added risk of stop loss hunting from institutional players. They also see this level and say, maybe we could add a bit of pressure to this valve, if you will, and then have it blow up to the point where we can really trigger that and then have the market move in the direction that we intended originally. Who knows? My point is, this doesn't really help the crypto market as a whole, seeing some news like that, and arguably it's not going to help your XRP bag. In other news, advisors are weary of Bitcoin ETFs and their slow adoption journey. Right here it says Bitcoin exchange traded funds made their debut in January, but financial advisors have been slow to adopt them. So although the Bitcoin ETF, right, has been one of the fastest growing ETFs in history, that might only be true for retail investors. In other words, people like me and you. But when it comes to fund managers, pensions, mutual accounts, all of these big money players, they've been far more risk adverse and arguably not allocating nearly as much money. For now, about 80% of the Bitcoin ETF purchases have likely been coming from self-directed investors who made their own allocation, which is actually really huge. And if I come over to this analysis by this guy named Jim Bianco from Bianco Research. Okay, the following chart shows that the average size of a spot Bitcoin ETF trade in blue is just 14.6K, far less than any other ETFs that are very popular with TradeFi, and about 1/10 the size of an SPY or an S&P 500 ETF trade. This is exactly what you'd expect if the buyer is retail degens. And so let's just come over here. You can see the average size of the SPY, and you can see how a lot of these markets will trade very similarly, especially if they are risk on assets, right? In other words, it's a bit more risky to hold on to that asset in an uncertain financial environment, if you will, or an economic environment, I should say. But that being said, this red line right here would be the S&P 500. And so your average is currently sitting at about 184,000 as of June 17th, whereas Bitcoin, the average size of an ETF trade would be 14,000. So it just seems that the people that are trading in this Bitcoin ETF are relatively small traders. Now, this could be taken in a couple of different ways, right? The first way would be, well, you're still early, and that would be indicative based on the trend of the total money in it. If the majority of traders don't have that much money, that means mostly retailers are in it, which also, on the flip side, means that a lot of the bigger investors and traders and people with real money, okay, or that manage other people's money, haven't really adopted it yet. So that could be, based on their lack of confidence in the market. It could be based on a multitude of different factors. Maybe they haven't got approvals from their bosses or whoever is in charge of that entire company. It could simply be because they don't like Bitcoin. Who really knows? Okay. So one thing I am certain of is the fact that this is indicative that mostly retailers are investing in this ETF. And in crypto in general, right? Bitcoin being the mothership, whatever Bitcoin does, typically other markets will do. And that would, include XRP and virtually all other cryptocurrencies. But also, when you look at the amount of risk they're willing to take in asset classes like this, it could just be due to liquidity, right? If someone like Germany can come in and sell, I don't know, a couple $100 million of Bitcoin and slip the price by quite, a few percentage points. And by a few, I mean like 2 to 3, then that is not a liquid enough market for a lot of these bigger players. Hence why they would want to stick to the S&P 500. When you talk about a lot of these bigger players, they want the level of liquidity to be able to move 50 million, 100 million, 200 million without really seeing the price of the asset slip. And so arguably that would be my indication, because when I look at something like Bitcoin, okay, and I'll go ahead and pull up volume here in general, and I'll just go to a monthly time frame. Okay, and I believe I need to get a different Bitcoin chart. So, well, maybe not. Okay, so we're looking at a long-term Bitcoin chart. You can see that volume has consistently grown over the years, right? Back here, this volume, and I'll kind of get out of the way right here. This volume looked tremendous, right? And then when Bitcoin reached new all-time highs, this previous volume range looked very small relative to the volume that was entering back here. We're talking $1 billion. And then $1 billion in volume looked really small when we're talking $30 billion, and then $60 billion, so on and so forth. And so over time, the volume has increased, which means one thing, that adoption is there, okay? The adoption has just been a little bit slower than anyone would have expected or liked. But when you really look at the rate of adoption for something like Bitcoin or XRP or crypto in general, it's technically faster than the rate of adoption for like a radio back in the day, which then turned into a TV, which then turned into the internet and a cell phone. Typically it takes a long time, upwards of 20 years, for any one of these things to get to 1 billion users. Well, XRP is probably gonna reach 1 billion users at some point in time if they continue doing what they're doing. So will Bitcoin, and so will the entire crypto market. So it's really important, right, that you remain steadfast and just watch where the money is going. So even if you start to see very negative news, right, ultimately you have to have faith in the entire asset class or simply get out. Right? There's no reason to stay in something that you have zero faith in. And so we're not sitting here trying to confirm or validate any opinions that you may have or we have, right? We're simply trying to give you the best possible information to make your own educated decisions. So with that said, we'll get on with it. He says, in other words, the chart above is consistent with BlackRock's statement that TradeFi is largely not playing. Again, that could be taken in a few different ways, positive or negative. This blue line will go up when they start to play, which they are not doing now. Now, that could be due to the fact, right, that when you look at something like Bitcoin right now, and I'll just go ahead and pull that chart up, we are trending down. Since our range high of 71,000, and, since we sold off at that range consistently over 5 times now, I started a new downtrend. When we broke down below 67,000, we broke down and actually saw what used to be a support become a resistance, and we're consistently selling off in that range. And when I look on a daily time frame, right, we just see a series of lower highs and lower lows. And anytime we start to try to move back into a range high, like yesterday on, well, technically today, June 20th, it's just we're a little ahead of the curve here. We're consistently seeing sell pressure. So, a lot of these bigger players might be seeing price action like this and saying, you know what, although we're at all-time highs, I don't typically like buying highs. I like buying lows, which is something that institutions are typically better at doing than average retail investors. They like to either buy lows, or they like, if they're a trader who manages a lot of money, right, in terms of a mutual fund or something like that, they like to buy breakouts. And right now we're not doing either. So all we've been doing, when you really look at the price of Bitcoin, is trading in a range. We've been trading at, and I'll just go ahead and toss these lines right up here, okay, between a range of 71,000 down to 60,000 for about an $11,000 ATR, if you will, right? It's not an actual average true range, but this would be the range that I'd be looking at. In other words, the fact that we're starting to break down leads me to believe that we could potentially go lower. The one positive indicator that I've seen for Bitcoin as of recently would be the fact that sentiment is very, very negative now. A lot of people on Twitter are starting to, Twitter talking heads, if you will, are starting to get into arguments over what's going to happen. There's no real unity. The majority of altcoins and people that are invested in altcoins are now underwater based on their positions that they've taken over the last 3 months. A lot of people are starting to lean bearish or negative in terms of their futures trades, so on and so forth. So all of these negative leading indicators, I should say, are leading me to believe that we have a bit of upwards price action that is due on the cards shortly. It also helps, right, that when I look at an hourly time frame and I pull up something like the RSI, right, we're starting to get a bullish hidden convergence, right here through here, and I'll just go ahead and put a line on there. We saw a lowest low and then a higher low, right? And then we saw price start to change its trend slightly with a bit of buying happening as of today or at this hour. In particular, the price might look down, okay, but this is a healthy reset of this entire trend. So it is possible that we break down to $60,000, but if we continue to break down and then the RSI continues to look more healthy from a 4-hour time frame, as you can see right here, to an hourly time frame. Okay, now when you look at that 4-hourly time frame, again, same thing. We're painting a pretty strong bullish convergence, right? Hidden bullish convergence. In other words, we're getting higher highs on the RSI, lower lows on the price, and eventually this is going to have to give, and enough people will be short, right, that they're going to get liquidated when the price breaks above a recent high like 66,000. It might break back up to 68,000. However, right, if the trend remains true to the downside, then it's likely will break right back down. So whatever the play may be, right now is not a great time for me to go and leverage into the market. If anything, I'm just got to be patient and watch the market for its signals and what it's telling me. Okay. But again, this Bitcoin price action definitely has the opportunity to affect something like XRP, which now leads me into XRP. The good news about XRP, before we just dive into it, is that it's not typically positively correlated with Bitcoin anymore. So we'll pull up the price chart of XRP. And, we're obviously looking at the same thing everyone else is looking at. I bet you a lot of people have been just focused on, this consistent trend to the upside, potentially focused on some resistance right here at 73 to 74 cents. So yes, this thing is building a lot of support. The good news is, even if Bitcoin dumps, this thing is likely to dump potentially even less. It seems to me that this thing has less relative volatility than a majority of the crypto market. And that could be due to the fact that there's a lot of strong holders, people that believe in the product, people that want to see it win, people that are diamond handing this thing into the next major new all-time high. But as things stand, when I look at something like XRP and I pull up a correlation indicator. Now, again, I want to be clear. This is basically the correlation to Bitcoin. In other words, if I go to the price of Bitcoin, for example, or just, the chart of Bitcoin, and let me remove those drawings, you'll see that this thing is always sitting at 1. Why? Because Bitcoin is positively correlated to Bitcoin 100% of the time, 1 being 100. Okay, 0 would mean they're not correlated. And then negative range down here would be they're negatively correlated. So if Bitcoin is going up, then that would mean XRP is going down to the same magnitude, and vice versa. If XRP is going up, then Bitcoin would be going down. If they're not correlated at all, it could simply mean that Bitcoin is rising while XRP is staying the same. And again, vice versa. So let's get back to the chart of Bitcoin or XRP. And now let's look at this chart. As you can see here, XRP has consistently been just bouncing around. In other words, right up here, and I'll just go ahead and auto that out. Okay, right through here in November of 2022 through November 2022, but 26th, okay, they were both positively correlated upwards to 100%. That means that at that exact same time, okay, Bitcoin dumped right here, and then, Bitcoin started pumping. And so this was a positive correlation. Then through this range right here, okay, they seemed to be not only not correlated, but at one point negatively correlated. So it seems right in these days of December 12th of 2022 through like December 15th, XRP started pumping a little, and it's highly likely that in that time frame, Bitcoin was actually dumping. So whenever I see a lot of bouncing like this on this correlation indicator, and we'll get in there a little bit further, right, like this, and less hanging out at this top line, that is a good indicator that it's not going to trade the exact same way that Bitcoin does, which means it could be a hedge against, any volatility in Bitcoin. So if Bitcoin started dumping, it'd likely be better to hold XRP versus something like Ethereum. And we'll show you, because back in the day, when I look at XRP, look at these ranges here. You would actually hang out here a lot longer at near that 1, and then you'd get some times where it's like one is moving but the other isn't, or vice versa. When they're negatively correlating, they're moving away from each other completely. Okay, they're diverging, if you will. And then when you have it here at the 0 line, they're kind of just one, it might be moving and the other might not be moving. But XRP and Bitcoin used to be far more correlated in the 2017-2018 cycle, and that obviously started to change. As you can see over here, you're seeing a lot more noise on this indicator. When I look at something like Ethereum, for example, you'll see that Ethereum lives far more up here, okay, than Bitcoin. And if I were to go ahead and pull up XRP one last time, okay, and since we're on XRP, I'll just pull up the Bitcoin chart at the same time, BTC USD. We'll go ahead and toss that one on there. And we'll just look at this correlation. So for example, this is a perfect example. Notice how the correlation was even right here. Okay, between, and by the way, this orange line is Bitcoin. We're looking at percentages, but in general, it's very helpful. So look, right up here, Bitcoin and Ethereum moving exactly in the same way, right? One is dumping and then ranging, one is dumping and then ranging. And then as it became negatively correlated, what happened? XRP just started ranging and arguably dumping just a slight amount, while XRP started pumping hard while Bitcoin started ranging and then dumping a little. And then right in this range right here, as we were looking at 2022, look, both dumped, right? And so in that process, they were positively correlated. So typically when I'm investing in cryptos and I'm like, you know what, I'm a little bit worried about what's going to happen with Bitcoin. Well, 9 times out of 10, a crypto will be positively correlated with Bitcoin. But every now and then, it won't be. And so whenever I see a correlation coefficient like this, it's a better asset to invest into if I'm worried about what's going to happen with Bitcoin, as long as the price remains true, as long as the price looks strong. If it looks weak and then Bitcoin looks weak, I don't want to touch it. But if the price of this asset looks strong, but Bitcoin looks weak, then 9 times out of 10, I'm going to enter that trade, but I'm going to set a very tight stop loss, because if anything happens with Bitcoin overnight or some major news event comes out that harms the crypto market and the general market, and then Bitcoin starts to dump, chances are the crypto that I'm holding is also going to dump. And that could be set off for a lot of factors, right? It could be legitimate asset managers and retailers just freaking out and selling. But it also is typically algorithmic trading, right? There's a lot of market makers and firms that have algos that are trading these cryptos typically in the exact same way, which is why they're so positively correlated. Chances are the crypto that I'm holding is also going to dump. And that could be set off for a lot of factors, right? It could be legitimate asset managers and retailers just freaking out and selling. But it also is typically algorithmic trading, right? There's a lot of market makers and firms that have algos that are trading these cryptos typically in the exact same way, which is why they're so positively correlated. I mean, even looking at the chart from back here in 2021, you can see that there's a lot of correlation between the price moves, right? We had a little pump right here on XRP. We had a pump on Bitcoin that was slightly higher, but then they both broke down in similar fashion. Then, since basically 2022, they've started to become negatively correlated. One thing I will mention is, just because you can invest in XRP and just because it is less correlated doesn't always mean it is the best investment over a longer period of time. What I like to do is follow the leaders and play with the winners. And so I will hold XRP, but only if it's consistently performing or outperforming other cryptos. In this specific time frame, from June 2022 till present day, Bitcoin is up 192%, while XRP is up 57%. In other words, Bitcoin has slightly outperformed it by, 4 times. So it's more than just slightly. And I think it's really important to look at that and say, over a period of 2 years, holding one has netted me 192%. In other words, if I invested $100, right, I'd be up to $300, but $100 in XRP would get me up to about $157. So there's a pretty tremendous difference in terms of performance there. And again, I understand that it could be due to the lawsuit. I think that's had a big major role in it. But at the same time, I'm actually pretty excited about what's going to happen with XRP over the upcoming year. So now let's dive into XRP in particular, right? And in general, what I think might happen into the upcoming month, couple months, what to look out for, and how to avoid this zone, okay? So the first thing I want to make mention of is the fact that since April 13th, we've been in a range, which I don't think there's anything wrong with being in a range. If I were to pull up volume, we'll go ahead and do that right now. Okay, volume has remained relatively low and arguably below average. The same would remain true on, let's see here, Binance. So I am juggling the chart back and forth between a few different deals, and the reason for that, and maybe a cool little educational piece, would be if I go to a weekly time frame, you can see that Binance doesn't have a ton of trade history. April 2018 would be the first, but you remember 2017 we have quite a history with XRP hitting crazy all-time highs. So when I bounce back and forth, the reason I'm doing that is because on the XRP on Bitstamp chart, okay, you can see that I have the full range of price history, basically back to its inception in 2013, 2014. Whereas on Binance, I simply don't have access to that. However, on Binance, we have far more trade volume, and something that I want to note here, we have 35.137 million shares traded today, whereas over here, we only have 897K shares. So there's far more volume on Binance. So when I'm looking at volume, I would typically choose the chart that has the most volume because it's going to reign true. Okay, so what we have seen, and one thing that is very positive for XRP, is that anytime we touch this lower range here, you can see that there are buyers stepping in. They usually wait for a little bit of positive price action. Okay, so that would have happened here. This simple chart pattern right here, if you will, prove to buyers that there's enough buying here, and then a wick right up on this range here. I'm going to try to get in there a little bit further so you guys can really see right here. Okay, see that wick? We're putting in new highs. We're getting bought out at the lows. Gave buyers confidence that this was a local low, which caused the price to jump right here. Okay, and then the same thing happened right around here. You can see that this pattern happened again, and then we had what you would call a 3 white soldiers pattern into a move to the upside, and yet again here. So these volume bars, okay, are telling me a story. They're telling me that we have a strong range of support and buyers at this range of 30 cents, 31, 32 cents, with a strong long wick to the downside here and here that was bought up and supported. And so now I have a strong support right at that 32 cent range. And when I pull it back and go through history, you can see that what used to be a resistance here, right, with a bit of volatility in between, became a support. So there is a lot of demand at this 31, 32 cent level, okay? However, it doesn't seem that there's a lot of demand, and let me go ahead and get right up here, past, at least currently, past this 66 cent level. So whenever we climb above this range here, usually that first move is always going to be massive, right? And the same thing happens with Bitcoin. I can compare them chart by chart, but usually that first move kind of sets the new, that price discovery for the time period, if you will. And then you start to get, the chart checking that range, if you will. So it checked it for a 1 week, 2 weeks, 3 weeks, and each time we're in this range, we start to wick to the downside. So we see a wick, but then it breaks down. So we failed for a period of quite a while now to break above that 66 cent range, right? And it has been 343 days, so almost an entire year of ranging. So my new range, and the reason I call this range right here the uh-oh zone, would be right here. Let me go ahead and put a line there. And again, I don't typically like to only work with lines. I like to work with ranges. So my range would realistically be here to here. Let's go ahead and get that opacity a little lower, and I'll change it to green. Okay. We'll leave it at white because why not? It looks kind of nice. So this would be my actual range of support here. How do I know this? Well, look. We have a lot of support here consistently where if we wick down, right, once, twice, and then we have a few wicks right here, consistently we're seeing buying. We saw an increase in buying right at this range here, right, with the volume. Then the volume again confirmed that the range down here, right, as we grow in volume and we see bigger green volume bars, we're confirming that there's some support here. Even with volatility and a breakdown on Bitcoin and crypto, the general crypto ecosystem, right, we're actually seeing large wicks to the downside right here. In other words, even if the price breaks down here, there are enough buyers stepping in below this range of 48 cents to 45 cents to buy it. However, and this is why I'm a little bit nervous about what's going to happen with XRP into the upcoming couple weeks, we are not seeing real support here. Well, we're seeing support. Sorry, we're seeing enough resistance here, if you will. You notice this wick here, 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 and here. Okay, we're not seeing enough buying to really bring us back above. So what I would like to see, okay, is a break above this range high right here at 55 cents. Okay, I'll put a line there. If we can break above this 55 cent range at a serious time frame of at least a daily bar or greater, that will be very confirming that we're at least going to move to the upper range here at 66 cents. And again, as resistances work, the more times you knock, the more likely they break out. Typically, I like to see a breakout that is confirmed with volume. As things stand, volume has consistently declined. And now, because interest is basically lacking, okay, my theory is whenever you get tight contractions like this, you're due for a break or a move, which is why this is critical, guys. It's really important that you start to make decisions now before a break, whether it's to the upside or the downside. So here's my point. Let's get in here real quick. We're just going to get a line here, and it doesn't need to be perfect, but I'm trying to hit the most points possible. I want to get through those wicks. There is no perfect way to do this. I am seeing support here, so let me just drop this, okay? But if we start to break down right below this line right here at like 47 cents, okay, and then right below this previous wick low, and that would be at, let's drag this right here, at 45 cents, okay, with a close below these lows, that is a very dangerous place for XRP to be, because if it breaks below there and holds that range, there's virtually no support there. If I pull up like a VRVP, you can see that so much volume is traded here that now it's going to be very difficult for it to break back out. So unless we get some new buyers, some new interest, you go and take all of your paychecks, which I do not recommend. Don't try to be the liquidity provider for something that is too big for you. Okay, you don't have $1 billion to play with this. It's not likely anyways. And so I wouldn't be messing with trying to move a market here. My point is, unless a lot of new people or investors come in with a lot of money, it's going to be very difficult for XRP to break above that 52 cent range. And so typically I like to trade with the general direction of the trend. And right now, it does not seem to be up. It was up from 2022 to 2023 in July, but over the past year, we've just saw a ranging, and now we're breaking down to the lower portion of this yearly range here. So unless we break out and above 52 to 55 cents, it's not likely that we're going to break. It's more likely, that we're going to break to the downside, which would be our first support would be at about 38 to 36 cents, and our next major support would be really that 32 cent range. And this is far more likely to happen, okay, if the entire crypto market breaks down, and arguably Bitcoin does. So it's really important to pay attention. Even though, right, they're not 100% correlated, at the end of the day, when it comes to big dumps, all of the markets are typically correlated. So I would watch that very, very closely, the ranges that I just mentioned. Now let's move on to that future telling indicator. Okay, if you go to coinglass.com and then from there you go to long and shorts, click on one of those. You can click on long short ratio, okay? And you scroll down right here, we're going to find some data. Okay, now it might look slightly confusing as we're looking at it, but I'm going to do my best to explain it. Okay, if you come over here first and foremost to XRP, you can just drop that down, and we're going to do 24 hours, and we can do the same thing right here for long and shorts on the accounts. Okay, and we will scroll down till we see XRP. There we are. Click OK. Now this is Binance, which means, it's one of the biggest exchanges. I think it is the biggest exchange in the world in terms of volume, in terms of traders, so on and so forth. So very helpful to have access to that data. Okay. We're going to start with the USDT longs and shorts. In other words, long divided by the shorts. In other words, if this is at 1.5 as a ratio, that would mean there's 1.5 traders for every one trader who is long. And typically when you have more traders that are long, even though someone's taking one side of the trade versus the other, and I'll give you an example. If there's $1 million of open interest on futures, okay, that would mean that 500K of that is on the long side, 500K of that is on the short side. That means someone is placing the bet of 500K. Now you could have one trader or one account that fronts the entire $500,000 on the short side, and you could have 5 different traders that have $100,000 each. What matters is that they're the same amount of liquidity. Okay, you could have 20 traders on $500,000 and one trader. Ultimately, the higher this rate goes in terms of long accounts would typically indicate that those are retail traders or investors because they have or are trading with less money. So whenever the long ratio gets really, really high, okay, I'll give you an example here. right here on June 13th, the amount of long accounts holding a long position was 82% versus 17% on the short side. That would indicate that a lot of retail traders were long on June 13th. So if I hop now on over to the XRP chart, let's go ahead and hop on over to there. Turn that off. We'll turn off volume. Let's look at what happened on June 13th. I got to make sure that I'm actually on my time frame right here. Bam. Okay. June 13th. You can see here a lot of traders were long. And for that reason, what happened? The market dumped. Notice how there was actually, this is such a crazy candle here. Look right here. Everyone was long, right? And there was zero wick to the upside. So I have no reason. The buyers could not even hold the price. We had a bearish engulfing candle. Everyone looks at this price, 47 cents, wants to buy. And guess what happened? The next day, the market dumped from 47 cents down to, 46 cents. Now, if you are long on leverage, right, that really hurts. If I did it with $1,000, I could be liquidated below this low. And that's exactly what happened. A lot of people probably have their stops right here at 47 cents. The market moved against them. Okay, let's go back to that chart. Now, it's difficult to know whether or not you should go long or short based on an indicator like this alone. So it's not, in my opinion, extremely helpful, especially if you're just trading in a range like this pretty consistently, from the perspective of what should I do the next day. But arguably, it is very indicative of where the current sentiment is over a sustained period of time. So for example, when I'm looking at this long shorts accounts one specifically, okay, what I'm really focused on is this stuff over here. So sometimes you'll get a false reading like, oh, we have far less long accounts here on June 17th. And I go over here and look at June 17th on the exact same time. Okay. And I can see that the market pumped right here, even though we had 71% of people long there. So people probably started taking profits right here and made their money on their longs. And then the market cooled off again. And it really didn't tell me anything about whether or not the market should go short the next day. You could argue any one way. So what I'm really focused on is the general direction of the trend. As I'm seeing, okay, we're getting a series of lower highs here. We're getting a series of lower lows since that point in time. We are at a new support. And so it's very difficult to know what's going to happen, right, with XRP. So what I like to do is say, okay, well, we're seeing resistance right here, right? We're in a wedge. We've seen consistent selling, right? And now we're just trading in this range here. Is it a great time to go long or short? Well, not really. What I'm focused on again is this. Watch. Since May 22nd of 2024, the majority of retail investors have been long. We're talking on June 1st, 78% of accounts were long. Over here on June 7th, 77% of accounts were long, right? So for every one short account, you had 3.35 long accounts. Over here, the day that we talked about, 82% of accounts were long, so on and so forth. And so it's at a point where if the majority of investors are long since June or May 22nd, and I'll mark that day right here, you can safely assume that the market is going to continue to decline. Why? Because the majority is typically always wrong. Okay. You never want to follow the herd when it comes to investing. You want to be against the herd. And so since May, what has happened? The price has declined and failed to break above this low right here. Notice how if I put a line right there, and this is how I would use this tool, it told me a story. It's telling me that while the majority of investors want to be long, I likely want to be short. When I look at this, since this day right here, you can see that when we broke down below here, we failed to break above this high and consistently sold off. And even when we tried to rally, we couldn't even rally to the 52-cent range and broke back down. So now we're trading in this wedge, and typically I want to trade with a trend. So it's very difficult to know what's going to happen, but I can safely assume that if we break down below, like I said, that 44 to 45 cent range, we're likely going lower to 36 cents, I would say, 38 to 36 cents, and then down to 30 if we don't really see support there. So right now we're really at this crucial breaking point where XRP needs to make a decision. Now let's move on to the final portion of this video. The mystery crypto is Nimic. And if you go to the website, we'll hop on over there right now. It says it's the most accepted crypto in the world. And I would argue that this is very poor advertising, if you ask me. It might, get someone that is relatively new to the crypto world excited if they don't know anything about crypto. But I doubt this is legitimate by any means. They say they're accepted in 29,000 locations. Again, I don't know what that means. But whenever I see buzzwords like that, I'm a little bit nervous about whether or not it's actually real or whether or not it's a scam. And so I always like to look at the price action and the chart, which tells me more of a story than typically a website like this. It says the most inclusive blockchain ever, which again, to me just sounds like advertising, poor advertising, right? Buying crypto is as easy as sending a bank transfer. Your keys, your coins, introducing the first fiat crypto atomic swap, which is still a work in progress. Again, these are all buzzwords. An atomic swap. When you come over to the about section, Nimic is designed to make cryptocurrencies easy to use for everyone without compromising decentralization. Sounds like a lot of cryptos arguably are trying to do that. That's the only reason that retail would invest in it. So why am I even mentioning this thing? Well, first and foremost, I don't know if it's a scam. I don't know if it's a great crypto. Personally, I wouldn't look at this crypto for the sake of investing long-term like Bitcoin or XRP. However, the price looks pretty solid. Okay, you can see here there's virtually no selling at both the low on June 4th and the lows on June 13th to June 14th. It's trading negatively correlated to crypto or Bitcoin in particular, which means that while Bitcoin is going down, this thing is climbing up, and it's up about 45, 46% over the last week, which is pretty rock solid if you ask me. And so I like to get a lot of price action in history, okay? I'm gonna go to that weekly time frame. And one thing that I'm noticing here, okay, is that we have a very strong long range here with a bear trap right down here to these lows. And the range would be at a 0.0009, okay? And the highs of the range would be right here at about 0.0017. So we're seeing a very strong long range since May 2022. So this is a 2-year long range. And if we break out above the 0.0017, okay, to me, that would look like a pretty good opportunity to buy. But I'd also like to look at the volume. And so again, volume tells a really good story. We're seeing consistently growing volume right down here. I'll just lower that real quick. You can see that we were below average for a sustained period of time. And again, we're on a weekly time frame. So this is a very long period of time. And then we saw volume climb pretty, tremendously. And volume has consistently been climbing over a 30-day period or average for since, let's see, its low in December of 2023. So this entire year it's been climbing. And although it has failed to break above these range highs, I believe that with enough buying and arguably if I see volume confirm this move, if I see volume grow and break out to the upside right here and a close into this range above the 0.0017 range, then I'll be a happy buyer. Again, this is not something that I'd want to hold long term. This is something that I'd simply trade for a swing. And I'd like to see it go into this 0.0026 range and above, potentially even into this previous, again, support. So that would look like something like this, okay, at that 0.0036 range. So this could be a potential play of 101%, but I would not, be buying it unless it breaks above this range here and holds it on at least a daily to a weekly time frame. Weekly might be a little low, so arguably a daily time frame is what I'm looking for. And if we break above this range right here and then break right back down, I'm getting out immediately. So I do not want to hold the risk and watch it break back down to this range here. Okay, so that's the play for the week, or the day, I should say. And if you enjoyed this video, okay, click the subscribe button. It really helps the channel out and gets these videos in front of other people who are XRP investors and arguably will be swayed to potentially make a better decision about their portfolios. And also, smash the like button. Again, it all helps the channel out, and we really appreciate you being here and watching this video for this long. And I look forward to seeing you in the next video.